Hi, I'm Colby Jenkins. I'm an analyst here at TABB Group. I'm sitting with Adam Sussman, the Director of Research, and we just finished our 6th annual U.S. hedge funds equity trading study, where we spoke with 63 U.S.-based hedge funds. Adam, over the years, what would you say this year differentiates itself most from the past, from the conversations that we've had?
I remember 6 years ago when we first started talking to hedge funds about algorithmic trading. And at the beginning, it was very clear that they saw there were some first mover advantages in terms of the brokers that are out there, getting the word out on their projects, on their products, educating the folks on how to use them. And that first mover advantage has stayed relatively consistent over the years. But what happened over the last 2 or 3 years is that people started to say, I use these brokers and I use them for a while, and familiarity is the top driver behind why I use them, pointing back to that first mover advantage. But I don't see a lot of differentiation. Now that started to change a little bit, and it's not differentiation necessarily in this algorithm outperforms that algorithm, or broker A's VWAP is better than broker B's VWAP. What we're seeing the differentiation come from is really in the service that broker provides them in terms of information on market structure, keeping them up to date on changes within order types at their dark pool or at other people's dark pools, or even just good old-fashioned picking up the phone and helping them choose. Hey, for this kind of order, you might want to dial down the aggressive level, or you might want to change the way that the timing of how the algorithm slices the order out over time. So we're seeing differentiation, but it's kind of that good old-fashioned service that we're seeing compete well.
Right, so it's more of a kind of a comprehensive type of relationship type of thing.
Yeah, exactly. It's not necessarily just a product that people are looking for.
Absolutely. Now, would you say we go into great detail in talking to people about what brokers are really differentiating themselves year over year? We have some type of a ranking. Would you say this year we've seen a major change or shuffle in who's really coming up?
Yeah, I think people will not be shocked that there has been some changes in the ranking. Everyone knows that the industry has undergone massive personnel changes with the kinds of folks that the buy side likes to work with, moving from one broker to another broker. In addition, because of this differentiation I talked about before, that's also changing the presence of a broker, like the number of hedge funds that would list that broker as a top 5 broker. And we went a little bit further, as you know, this year, and instead of just asking for, hey, who are your top 5 algo brokers, later on in the conversation, we asked, well, who are the best in class? Who's really good at this? And while the top 3 in each ranking are the same, not necessarily in that order, but the top 3 on chart 1 are also the top 3 on chart 2. Beyond that, it becomes different. And so I think what people are saying is, hey, there are some folks that are best in class providers. I might not be able to give them as much commission dollars as some other folks for a variety of reasons, but there's other players out there that are demonstrating value. And I think that, to me, is a sign of opportunity within the space to continue to capture mind share and market share.
So I think that's just about all the time we have. My name is Colby Jenkins. I'm an analyst here, and this is Adam Sussman. Good night.
Thank you.